Hey, it's H here. Today we're taking a look at technical analysis for SP500. I'll cover wave analysis with the Elliott Wave Theory and provide multiple scenarios price may take and explain why I prefer one counter over another. Let's take a look at the higher time frame first. Starting here on daily time frame and looking at this structure again from the 2020 March lows. Now I haven't shown this chart for quite some time, so I don't even have a count here on S&P 500 or ES1 on the futures charts. I have it on SPX. So just to make sure that everybody is with me on this count to the upside, we had something like this as the main count, having a 5-way move up into the highs from these lows, ending up at these highs was the main count. Since then it has been playing out, and some of the targets that we've had are still yet to be covered. So that is why I am still remaining bearish overall. The idea that I had was something like this, that this was either a wave W or wave A, then 3-way pullback up higher, or now that we are looking like we are possibly coming down more, then we could accept that this was indeed the connector wave to connect this structure to the downside. And then again, what we would mean is this. So if we are just looking at some of the fibs here, looking at some of the targets, give or take, I'm going to go too precise on this, but we can see that 1-to-1 is hitting exactly to the golden pocket that we have here. So that is again one of the higher time frame targets. I just wanted to share that with you because I know that some people are still confused about these, as I am as well. I'm not quite sure if this is going to be a 5-way move or whether this is just a 3-way move in which we connect this structure over here to this to create this larger flat pattern in here, and then and only then we can have a 3-way structure coming back down to this golden pocket or even the 0.5. Again, if we are going to go higher, then we have to remeasure this move downwards and give it more targets. But again, these were the original targets that we had, the 0.5 and golden pocket, and they seem to be playing out quite well at this very moment. But let's now focus on this more local structure, get back into this more local things over here. So what we had again on 4 hour, looking at this again, 3-way structure here as a WXY, 3-way structure here into that, basically almost getting to that golden pocket here onto the upside, and then looking for downwards again. Now I'm going to remove that because I don't think that is the case anymore. Let's see, where did we have it? There we go. So again, the two different ideas that we have on higher time frame, or at least 1 hour time frame, is that we had this as either the connector, and this was going to be part of something new, this wasn't part of this structure before it, and for that structure we would have this, and in that we would have this as a 1-2, and then this would be a 3. Now at the moment there is still no confidence on this, at least for me, even though we are impulsing a bit lower than I would like at the moment and a bit too fast to my taste. The 1.618 would tell us a better story of this whole thing. Sorry, this 1.618 here, around 34.88. At that point, again, it would be more better looking. It would be better looking to have this as a 3rd wave here instead of that C wave that we are expecting here for that ABC. Of course, we have the other count saying that we have this as a WXY, and this says that it could be an ABC. Both of them are valid. Both of them are not breaking any rules. I'm just preferring the WXY at the moment because it is fitting a bit better in my opinion here. 1-to-1 target here. Let's move this guy out a bit. 1-to-1 target would be around 35.95, and the 1.382 of that higher time frame WXY count would be around that same area. So that is definitely one target. For that to be the case, we would have this as an A wave, B wave, and then this would be C wave. Now there are a couple of different ways to look at these very local structures in here. So let's take a look. Again, after the FOMC meeting, we had this dump, having this as the end of the wave B. We did not reach the targets here, so I did not take any short positions, again, because that is not part of my strategy. Now, I was looking at this dump here as a potential 5 waves. It is possible that we have this as a 3-way structure as well. If we are looking at on a lower time frame, we see that we had some wicks here, and some could say that we have this as a 3-wave. It does not really matter to me too much. It is possible again to have this 3-wave structure as another wave 2 here, and then either we have this as a 1, 2, 3, 4, 5 as another wave 1, so creating this 1, 2, 1, 2 scenario, or we're going to be having this as a 3-way structure like this, and having this whole structure as a 1, 2, 3, 4, 5. Now the issue with this one is that this retracement over here is so small compared to the rest of the structure, so it doesn't really fit in to say that, okay, then this has to be wave 1, this has to be wave 2, and then we go downwards to the 1.618 extension of this first leg. Now, however this is going to be playing out, I'm not quite sure, but those were the 2 scenarios I'm looking at on the lower time frame. So take it with a pinch of salt. Again, shorts opened, definitely going to be having a good time here, I feel like. Again, some of the targets were down all the way here. Then we had the other count, which was saying that we had the impulse wave structure here as a 1, 2. And then instead of this being an A wave, this would be a wave 1 instead, a wave 2. Wave 2 could be here as well at these highs. Depends on your views, both are possible, however. And then the very exact same structure over here. Obviously this can't be a wave 1 anymore, so let's remove that. But depends on your view on this. We are coming down most likely to that 3, 4, 5. And at the moment, again, we are most likely going to be breaking these lows that we had here on RSI, and that would be the confirmation that, okay, we have entered the third of third, most likely, because usually the third of third on RSI is going to be giving us the highest amount of, or the most extreme RSI readings. So that would be what this is going to imply. But those are the scenarios I'm looking at the moment for S&P 500. It's going to be a wild ride down. If you're in shorts, good for you. If you're not, there could be some possibilities here on very small pullbacks to get in, but it's not going to be offering that good of a risk to reward anymore. So it could be better just to stay out until this clears up a bit more. But those are just my views. If you made it this far into the video, I would appreciate the likes. Link to my free Discord server in the description below. And for now, thank you for watching and I hope you have an amazing rest of your day. See you in the next video. Bye bye.